Okay, let's talk about that one piece of mail that can send a shiver down the spine of any business owner, the dreaded audit notice. I mean, just the word audit is enough to cause some serious stress. But what if? What if we could look at it a different way? What if an audit, instead of being this huge threat looming over you, could actually become a real opportunity? In this explainer, we're going to break down exactly how to flip the script, shift that power dynamic, and maybe, just maybe, turn a tax audit into a profitable experience.
Just a quick note before we dive in, this explainer was prepared by Samir Al-Rashani with AI support.
This quote, this is everything. This is the core idea for our entire strategy today. Facing a tax audit can make you feel like you've completely lost control, right? But we're going to show you how gaining the right kind of knowledge puts you right back in the driver's seat.
All right, so here's our roadmap. First, we're going to dissect what an audit really is. Then we'll get real about the high stakes involved. After that, we'll reveal your secret weapon, walk you through a step-by-step playbook, cover how to fight back if you get an unfair assessment, and then we'll tie it all together to show you how to actually turn this whole thing to your advantage.
Okay, let's get right into it. To win the game, you've got to understand the rules and the players. So what really is a tax audit? And why does it feel so incredibly intimidating? To make this all feel a bit more real, let's talk about a guy named Ruben. He's a classical guitarist who became a super successful composer, and his story, well, it's pretty much a perfect example of the challenge. His first audit hit right when his career was just starting to take off. The Canada Revenue Agency, the CRA, they challenged his business losses. They basically called his passion a hobby. Now he fought it, and he won, literally right before his first big royalty check came in. And Ruben's story, it really shines a light on some fundamental truths of the tax system. First off, if you're self-employed, sorry, but your chances of getting audited are just higher. The CRA also has a ton of power. They can literally throw out the return you filed and create their own version of what they think you owe. And here's the real kicker. The law assumes their version is correct. The entire burden of proof to show they're wrong, it falls completely on you. So after Ruben's career really started to boom, he was a bit late filing his returns, and guess what? The CRA came back, and this time it was way more serious. They pulled out a big gun called a net worth assessment. What they do is they look at your lifestyle, his new home, his studio, and they basically estimate the income you'd need to pay for it all. And just like that, they threatened him with a huge new tax bill based on their own math. It's a seriously intimidating tactic. So you can see how quickly this can spiral. And that brings us to our next point. You have to understand just how high the stakes really are. Knowing what motivates the CRA and what the penalties look like is absolutely key to getting yourself prepared.
The CRA's number one motivation, the big driver, is something called the tax gap. Now, this isn't just about catching people who are trying to cheat the system. It also includes honest mistakes and even people who just can't afford to pay. The government's goal is simple: close that gap. And audits? Well, audits are their favorite tool for the job. And the size of this gap is just staggering. We're not talking about a little bit of cash here. We're talking about billions of dollars in uncollected revenue. Now, the CRA figures that audits can close this gap by as much as 66%. So you see why they're so motivated, right? From the government's point of view, auditing taxpayers is an incredibly profitable business. And this is how the costs can just explode. Simply filing late? That's an instant 5% penalty on what you owe, plus another 1% for every month you're late. Do it again within 3 years? Bam, those penalties double. And gross negligence, which can just mean leaving out major chunks of income, that's a jaw-dropping 50% penalty on the tax you understated. It adds up, and it adds up fast.
And believe it or not, it can get even more severe. Little administrative mistakes can cost you. Make a false statement about foreign property, you're looking at a minimum penalty of $24,000. And then there's the big one, tax evasion. That carries penalties up to 200% of the tax you owe, plus the very real possibility of spending up to 5 years in prison. The stakes just could not be higher.
Okay, take a deep breath. I know that was the scary part. But now that we get the risks, let's get to the good stuff. This is the single most important mental shift you have to make. And right here, this is it. This is the core mindset shift. The very thing that seems like your biggest problem, that whole burden of proof thing, is actually your greatest strength. Why? Well, think about it. An auditor is working with assumptions, with industry averages. They have a formula, but they don't have the full story of your business. But you do.
This is the key. The auditor is just an outsider looking in. But you lived the story of your business. You made the decisions, you faced the challenges, you came up with the strategy. When you take that deep personal knowledge and combine it with clean records and good professional advice, you build a defense that is almost impossible for an auditor's subjective judgment to break. You actually have the advantage. So how do we use that advantage? We don't sit back and wait to react, we get proactive. Let's walk through a concrete, step-by-step game plan for the moment you get that audit letter in the mail. The second you open that letter, the clock starts ticking. Step 1, don't panic, call your tax advisor immediately. Step 2, have them ask the CRA for an extension. This takes the pressure off. Then, you and your advisor, you get to work. You find any missing documents, you figure out your best and worst case financial scenarios, and, now this is the really crucial part, you start looking for tax provisions you might have missed when you first filed. Finally, you wrap all this up into a clear action plan. And this just lays it out perfectly, doesn't it? An audit has two sides. Yeah, the downside is clear. You could end up owing more tax. But there is a very real upside. The best possible outcome isn't just no change. You might actually find a deduction or a credit you totally missed, which means the CRA could end up owing you money. That's the profitable part we're talking about. Now, once you get an actual notice of assessment, your action plan gets really tactical. You file your objection on time, no matter what. You organize all your evidence like you're building a court case, chronological, logical, airtight. You also have the right to ask the CRA in writing to explain the legal basis for their decisions. You got to stick to the facts, be honest about any weak spots, and always, always be on the hunt for those missed provisions that can completely turn the tables in your favor. But what if, after all that hard work and preparation, the CRA still issues an assessment that you know is unfair? Well, the fight is not over, not by a long shot. It's so important to know that there's a structured, formal process for you to appeal. Look, it's not just one shot and you're done. You've got a whole ladder of appeals you can climb. It might start informally, but your first big, formal step is the notice of objection. If that doesn't work, you can take your case to the Tax Court of Canada. Lose there, you can appeal to the Federal Court of Appeal. And in some rare cases, you can even ask for permission to be heard by the highest court in the country, the Supreme Court of Canada. You have rights, and there's a path to defend them. Which brings us full circle. We've looked at the threat, we've seen the stakes, and we've built the playbook. So now let's lock in that mindset that transforms this entire process from something you defend against into something you can actually use as an offensive tool. So let's recap what you know now. You know how to meet that burden of proof by telling your story and backing it up with evidence. You have a proactive strategy. You know how to appeal. But the real pro move, the key to making this profitable, is understanding something called tax cost averaging. This means if an audit changes how an item is treated in 1 year, you can often apply that same logic to previous years, sometimes going back as far as a decade. This can literally uncover refunds from old returns you thought were closed forever. This is how an audit can truly become profitable. In the end, a tax audit is a serious thing, no doubt about it, but it's not some catastrophe that you have to be afraid of. It's a process. It has rules, it has strategies, and it has opportunities. And with the right preparation and the right mindset, it's a game that you are now fully equipped to play, and even to win.